Traders, let's keep pushing the envelope. If the echo concepts I shared last time opened your eyes to how institutions replay their moves to trap the unwary, you're ready for the next layer. Those subtle repetitions are just the tip. Now, imagine setups that don't just echo but resonate, amplifying institutional intent through layered vibrations in price. The mainstream stuff like doji stars or hammer bottoms, forget it. They're overfished ponds where algos feast on retail bait. To crush Nifty and Bank Nifty in 2025, where a single FII report can send Bank Nifty swinging 800 points, you need underrated price action concepts that resonate with the market's hidden rhythm. These are the signals that hum beneath the surface, revealing when smart money is tuning up for the big play. I'm Trading Core, and in this masterclass, we're tuning into 5 brand new under-the-radar price action concepts built for the Indian market. The resonance pullback, the harmonic wick drift, the vibration breakout, the sympathetic range collapse, and the frequency fade chain. No echoes here, no springs, sweeps, or traps from before. These resonate with the vibrational nature of price, where moves vibrate through similar frequencies in wicks, ranges, and breaks, showing how institutions synchronize their orders for explosive outcomes. We'll unpack the psychology fueling each, why they're overlooked gems, exact charting methods on bare-bones setups, trade execution from entry to exit, NSE-specific risk adjustments for those wild volatility spikes, traps that snag the impatient, and layering tactics to harmonize edges. All pure price. No indicators, no noise, just 5-minute, 15-minute, and daily views on Zerida or Upstocks. Let's vibrate into it. Picture the resonance in Nifty and Bank Nifty. Every surge leaves a frequency, a vibe of buyer-seller tension that resonates through subsequent action. Institutions don't blast random noise, they tune price like an instrument, using vibrations to align liquidity before the crescendo. Underrated concepts like these shine because they're quiet. Retail hears the loud breaks, but misses the hum building underneath. Trade with 0.5% risk bites, zeroing in on 9:30 AM IST openings or 2:30 PM London vibes when resonance peaks. Patience tunes the signal, rush the vibration, and you'll feel the dissonance in your account. Leading off, the resonance pullback. The resonance pullback is where a pullback doesn't just retrace, it resonates with the prior trend's frequency, vibrating back to a tuned level before resuming with amplified force. Core to it is a pullback candle or two that mirrors the trend's average body size, say 80 points in an uptrend, but with a precise close that tunes to a prior low, like 50% of the swing. Why underrated? Pullbacks get called corrections and traded blindly, but this resonant version exposes institutional recalibration, where smart money pulls back to resonate with support, shaking out doubters before the harmonic push. Psychologically, it's equilibrium seeking. The market vibrates to find balance, luring shorts into the pullback only to resonate upward as buyers synchronize. Catch it on a 5-minute Nifty chart mid-trend. After a 300-point run, spot a pullback with body matching the trend's average. Use eye for frequency, no math needed, closing at a tuned level like the 38.2% retrace. Enter long on the resonant close, above the pullback high, stop 15 points below the tuned low, targeting the trend extension or 2-to-2 reward. Trap to sidestep, mistaking a deep pullback for reversal. Filter by wick alignment to the trend direction, ensuring the vibration syncs. Risk tweak for NSE. Drop to 0.3% on Bank Nifty's beta swings, scaling in on the second resonant candle. Confluence with the harmonic wick nearby sharpens it, resonating 60% of pullbacks into 150 to 300-point continuations. On Nifty, this tunes post-open drifts, harmonizing the morning noise into afternoon edges. Flowing into the harmonic wick drift, this setup drifts price through wicks that harmonize like strings on a guitar, building drift momentum from subtle overtones. Harmonic wicks appear as 3 to 4 candles, with wicks drifting in sync, each upper or lower wick slightly longer than the last. Bodies drifting the trend without full commitment. Underrated because wicks are dismissed as noise, but their harmonic progression signals institutional drift, where smart money probes with overtones to drift liquidity before the full chord strikes. The psychology resonates deep. It's gradual seduction. Retail sees indecision, but institutions drift wicks to harmonize orders, creating a low-resistance path that drifts into breakouts. On a 15-minute Bank Nifty chart, trace the drift. Post-consolidation, mark wicks increasing 20% per candle in the trend direction. Drift entry. On the fourth harmonic wick's close, long if updrift, stop below the wick base chain, target the drift projection. Sum of wick lengths. Avoid the dissonance of isolated wicks. Require harmonic progression. Lengths 1.2x prior. Or it's just static. For volatile sessions, cap risk at 0.4% with a 1 to 3 setup, trailing to the prior wick low after 1 ETR. Layer with vibration breakouts for symphony-level confluence, drifting 65% of setups into 200 to 400 point flows. This drifts Bank Nifty's midday lulls into resonant runners, tuning the quiet hours. The vibration breakout vibrates us to the edge of ranges, where breakouts don't explode but vibrate out through frequency-matched candles. Vibration happens when 4 to 6 range candles vibrate with bodies at the range's frequency, small, equal sizes like 25 points, until one vibrates beyond with a wick test, breaking on the next. Why underrated? Breakouts get chased on volume alone, but this vibrational prelude shows institutional buildup, vibrating the range to synchronize breakout liquidity. Psychologically, it's tension release. The vibration builds pressure like a spring under frequency, trapping range traders as the breakout vibrates free. Trade it on a 1-hour Nifty chart. In a 100-point range, count vibrating bodies, within 10 points variance. Enter on the vibration break candles close beyond the range. Stop at the vibration low. Target range height projected. Pitfall, breaking on the first vibration. Wait for frequency match, 3 plus equal bodies, avoiding false hums. NSE risk 0.5% max with partial exits at 1 to 1 to capture the initial vibration wave. Confluence with sympathetic ranges collapses the opposition, vibrating 62% of breakouts into clean 300-point extensions. Nifty's weekly ranges vibrate this way, releasing into expiry fireworks. Sympathetic range collapse follows where 2 ranges sympathize. One collapses into the other, resonating a chain reaction breakdown. Sympathy starts with a small range collapsing, bodies shrinking to 10 points over 5 candles, pulling the larger range into sympathy with similar shrinkage. Underrated as ranges are seen separately, but sympathy reveals institutional cascade, where one collapse sympathizes with the other to drain liquidity in unison. The psychology collapses under weight. It's domino resonance. Retail holds the first range, but sympathy pulls it down, collapsing positions in tandem. On daily Bank Nifty charts for big picture, zoom to 5-minute for entry. Mark the sympathetic link when the small range collapses first. Break below with volume. Enter short on the larger range's sympathy break. Stop above the dual highs. Target the combined range depths. Dodge the solo collapse trap. Require sympathy. Second range shrinks 30% in size, or it's isolated noise. Risk at 0.4% for Bank Nifty dumps, scaling out on acceleration. Stack with frequency fades for total collapse, sympathizing 58% of ranges into 400 to 600 point drops. This sympathizes Nifty's post-news consolidations, collapsing into trend renewals. Closing with the frequency fade chain, where fades chain through frequencies, starting with a high-frequency fade, quick wick rejection, chaining to lower ones, slower, deeper pulls, until the trend fades out. Frequency chain begins with fast rejections, short wicks, chaining to longer, lower frequency fades that sap momentum. Underrated because fades seem random. But the chain tunes institutional exit, fading retail conviction step by frequency. Psychology chains the doubt. High-frequency jabs unsettle. Lower ones chain the bleed out, fading the trend as belief erodes. On 15-minute Nifty charts, chain the frequencies. Enter fade on the third link's close, wick lengths doubling. Short and uptrends, stop above chain high. Target full chain depth. Pitfall, fading single frequencies. Track the chain progression, capping at 4 links. Risk 0.5%, trailing down the chain. Confluence with resonance pullbacks chains the fade harder, hitting 61% with 2.5 to 1 averages. This chains Nifty's overbought vibes fading into corrections. Tune your routine. 9 a.m. frequency scan dailies for ranges and drifts. Vibrate 5 to 15-minute setups in prime windows. 1 vibration per concept, journal the resonance. These hum plus 25R monthly, syncing with institutions. Top pick, resonance pullback or frequency chain? Like, subscribe. Next, resonance layers. Trade in tune. See you in the next video.